Folks, the fight against the coronavirus continues. With over 4,000 confirmed cases and more than 70 deaths in the United States alone, the outbreak has disrupted the lives of millions and millions of people. Again, my prayers and condolences of everyone at Wealth Press go out to those who have been affected. Since the Dow Jones and the S&P 500 experienced their worst day since the Black Monday crash of 1987 on Monday, it's unclear where the bottom of this market lies and just how big of an impact the coronavirus will have on the stock market. This is going to have a huge negative impact on a certain group of stocks and sectors, and that's why I want to share with you a few of them that are flashing huge red flags. Here's what I'm avoiding in the stock market today. Now, a lot of times you hear me talk about sectors, relative strength, finding the strongest stocks, finding the strongest stock in the strongest sector. Well, guess what? All of these tactics that I use to find the strongest stocks to outperform the market, sectors to outperform the market, they all work to the upside, but they all work equally well to the downside. That's right. We can use the same relative strength scans to find stocks that are lagging behind the market, find stocks that are underperforming the market. For example, what we're doing is we're looking at top 10 sectors. So right now, consumer staples, healthcare is leading. I wouldn't really focus too much on technology, but technology, healthcare, and consumer staples. I would stick to the first two if you want to get in ahead of the crowd. Although I'm not recommending you do so because the stock market right now is way below the 200-day moving average, which technically puts us at a bear market climate. Now, so look at the lowest sectors, the sectors that are losing relative strength, that are lagging behind the overall market. We got industrial, we got financial, we got energy. Those are the three sectors that you want to focus on right now. You want to wait for a pullback to the upside and you want to sell stocks short, or you want to sell these individual sectors. Because in my experience, sectors that are the weakest in a bear market environment will stay weakest, just like sectors that are the strongest in a bullish market environment will stay the strongest. So let me now show you another scan. So that's the first scan I use. It's the 10 sectors. I took the S&P 500, I divided it into 10 almost equal parts, and I allocated them to each sector. So we're looking at the S&P 500 from the inside out. That's always what I'm trying to do. I'm trying to take the S&P 500 or the NASDAQ 100 or the overall market, and I'm trying to open it up and look at the under the hood elements. So let's take it one step further. What we're looking at right now is my S&P 500 relative strength scan. You've seen it many, many times. For example, if I switch this right here, you will see the strongest stocks. So for example, the strongest stocks right now are defensive stocks. Clorox Bleach, for example. Probably a good time to buy when there's a coronavirus outbreak, right? How about Regeneron Pharmaceuticals? They're working on cures for the coronavirus. Gillette Science. The bottom line is defensive stocks. Schmuckers, like Jams. Citrix Systems, for people who are trying to do telecommunication online versus in person right now, not to spread the coronavirus. So this way you could see all the stocks that are going higher, that are breaking out or are retaining strength during the period of the coronavirus. But if we flip this, now we're going to get the worst stocks, the weakest stocks, stocks that are just tanking right now. So for example, and here's what I want you to get out of this. It's easy to find one stock. What we're looking for is clusters. We're looking for a combination of stocks to tell a story. For example, Norwegian Cruise Lines is the weakest stock, followed by Royal Caribbean's. Well, Carnival is in 6th place. So right away, just by looking at this, let's say we don't know anything. We just know the coronavirus is impacting the world. We could see that cruise companies are really doing bad. In the weakest stocks in the S&P 500, or a group of the weakest stocks, is the cruise ships. Norwegian, Royal, and Carnival. And the odds are those stocks will stay in trouble for a long time. Let's go further. Let's see what other stories we could figure out. Boeing, airline stocks. People are not traveling right now, right? People aren't going shopping, Darden restaurants. Energy stocks. Energy's not doing really well. Look at this. Schlumberger, Helmerich. These are energy stocks. How about resorts in Las Vegas? Wynn Resorts. Not doing so well, right? We know that. They just yesterday came out with a story telling everyone they're closing the resorts down in Las Vegas, Wynn and MGM. So just by looking at this, look at this. ConocoPhillips, energy stocks. Coach, retailers. Nordstrom's, retailers. United Airlines, airline stocks. Do you see a pattern that's unfolding? So if I didn't know anything about, if I didn't do my sector analysis, if I didn't do my CNBC research, I didn't read the papers, I just basically came out of nowhere, I can look at this and get a really good picture. And I'm looking at just 20 of them or so. And you could see patterns here. Energy stocks, retailers. Energy stocks, retailers, airlines, cruise ships. That's where, those are the stocks right now. And remember something, even if they find a coronavirus cure tomorrow, the damage done to these sectors is going to be felt for the next quarter or two. So they may not be the weakest stocks, but they're not going to be outperforming the market, if you know where I will. These stocks are not going to be like Clorox with the best numbers coming out. They're going to be lagging behind for at least a quarter or two. So again, these are stocks that you want to avoid, and they're easily found with a very simple relative strength scan. Now remember, we're not comparing the stocks against the market. We're comparing each stock against another stock. So it's literally like comparing a race, a relative strength where one competes against another. And this gives us a very clear picture of what we can expect from Wall Street. Again, look at this. Nordstrom, Wynn Resorts, Coach. Everything fits a pattern. We were able to find 3 or 4 patterns just by looking at this. The energy sector, you don't want to touch. Retail stores, you don't want to touch. Are people going shopping right now in retail stores? No, we can't congregate. We can't, malls are empty right now. Stores are empty right now. And remember, a lot of these things are made in China. And China's not sending anything over right now because the ports are closed. The ships can't distribute everything that they have. All the toilet paper's on the ships right now. It's terrible. But the bottom line is, in every environment, there's good stocks and bad stocks. And right now, you want to avoid energy stocks, bank stocks, retail stocks, restaurant stocks, any stocks, cruise ship stocks, any stocks that's related to people gathering together. For example, cruise ship stocks, you want to avoid those. Those are the weakest stocks right now. And folks, this relative strength scan, it works in any market environment. It works in a choppy market, in a bull market, and a bear market. And I'm expecting these stocks that you see here to lag for quite some time. Hope it helps. Folks, what you're about to see could change your life forever. In the thick of all the negative headlines, a bear market, and record volatility, I get why the majority of traders are so fearful. I totally understand. But not everything has to be negative. There's one strategy that the world's most powerful and influential families are using right now to cash in on the current stock market levels. That's right. And to level the playing field, the ultimate insider is finally revealing how you can copy the stock market moves of the global elite. Click on the link below. Do it now. Access the strategy right now. You won't regret it.